Hey everyone, happy Thursday, October 3rd. It's time for another market update. I say Thursday, but I'm actually recording this Wednesday evening since I will be traveling on Thursday, but I wanted to make sure I got this out to you guys. So going back to last week, we had a big piece of data came out, the August PCE inflation data. So we know this is the Federal Reserve's favorite form of inflation to look at, especially the core, and it was kind of a mixed bag. The headline fell. The headline actually fell to the lowest number since early 2021, but the core rose slightly, actually to the highest time since April of this year. So let's take a closer look at that year over year. So the orange reddish color is the core, and this bluish color is a greenish color is the the headline. So as you can see, it's been a slow march down. It hasn't been very quickly. It's not dropping quickly. We know the Fed wants to get this line down to 2%. They say so. We're still got some work to do. Especially going up a little bit. But it was nice to see headline going down. Things like the Middle East, the stuff going on in the Middle East, the wars and stuff, that could affect the price of oil. That could lead to future inflation, especially in this headline number, since the core is supposed to take it out, but a lot of times it leaks in other categories. But overall, it's been good to see inflation come down. Overall, this wasn't the worst for what we want. When the Fed's looking at inflation numbers, this wasn't something to make them freak out. But it wasn't, again, seeing the core pop up a little bit, it wasn't a true winner for us overall. Next thing we got this week is actually jobs week. So there's a couple different jobs reports come out. First one we get, it's the JOLTS report. That's jobs openings. This one's a little dicey to, with so many online postings now and companies posting in different states, the same job opening. There's probably a lot of double, triple, quadruple, 50 times counting, maybe if they post in all 50 states. So this number tends to be a little bit inflated, but something we have to look at because job openings is kind of the first indication of where maybe the job market would start weakening. So last month in it would be July, there was 7.77 or 71 million job openings. This month it jumped up to 8.04 million, and it was actually estimated to come in a little bit lower at 7.65. So this was our first piece of data coming out this week in Jobs Week, and this wasn't a good one since again we want to see these job openings continue to fall. That would show the job market's tightening up and it's not as strong, and the Fed would then maybe make a bigger cut in order to stimulate that economy. So that is why anything job related we kind of want to see a little bit weaker and not get stronger because we want the Fed to cut their rates more. So that wasn't a good one. Next thing we got today actually was the September ADP payroll. So this private payrolls coming directly from ADP, who's does payrolls. It was supposed to come in at about 128,000 job creations. Last month it was at 103,000, and that was actually upwardly revised to 103,000. It was a little less than that to begin with. Today came in 143,000, so much higher than this 128K number, 120 to 128, depending on where you looked. So much higher than expected. Again, shows job market strong. One thing that did show a little bit less wage inflation. Job changers weren't getting as much money. Overall, wage was still going up, but not as fast as it was previously. So that was a little bit that helped a little bit on our end. But overall, these two, the jobs August JOLTS report and the ADP coming stronger than expected, definitely wasn't good for mortgage rates because, again, we want the Fed to think the job market's weak and inflation's great and we can cut rates. Next thing we got, we're not getting yet, but we'll get tomorrow morning, is initial jobless claims. It's estimated to come in about 221,000 new jobless claims, when people file for unemployment the first time. Again, very important to take a look at just because people file for unemployment. That's, again, a sign of weakness in the job market. So this number stayed pretty low over the last year or so, 210 to 240 range, somewhere in that, so which is pretty low. So again, this number comes in even lower, or it doesn't start going up, then that's something the Fed's going to look at and kind of point to and say, hey, the job market's great. Next thing, so where did that leave us? As of this evening, the average conventional rate is up to 6.25. So last week it was 6.21. I think the low we got down to, right before the Fed cut was 6.11 or 6.09. So we've definitely given up some ground, which we don't want to see. Still good to see it's about under 6.25. And again, a lot of this has to do with these different jobs numbers, the unrest in the Middle East. Just the Fed, different comments they've made about not being as aggressive on job cuts coming up. So, again, not good to see it go up, but I'd rather see it in the low sixes than the low sevens like it was before. So coming up, important dates Halloween, we're going to get the next PCE report, but the big one is this BLS 10-4. So we're going to get another one 11-1, but 10-4, this is this Friday. That's a big BLS jobs report for September. That number is supposed to come in about, I believe, 150,000 new jobs created, and unemployment is supposed to stay the same at 4.2%. So if there's less jobs created than expected, that would be good for us. If unemployment goes up, that would be good for mortgage rates. If you see more jobs were created than expected and the unemployment rate dropped, that would be bad for mortgage rates. So that is a big one. The Fed's really paying close attention to that. The higher you see unemployment go, really, the quicker they'll cut rates. So don't want to see people lose their jobs, but that's basically the game the Fed's playing. So if anybody needs anything at all, please don't hesitate to reach out. I'd be more than happy to answer any questions or anything you guys might need. So have a great week, and I'll talk to you guys soon. Thanks a lot, guys.